A very good morning. I'm Malcolm Graham Wood, and welcome to Core Finance for my CEO interview. I'm so delighted to say that my guest today is Larry Bottomley, CEO of Chariot Oil Gas. Welcome aboard, Larry. Good to see you.
No, thank you for having me here, Malky.
Great stuff. Okay, Chariot Oil Gas, obviously a lot of people in the market now. You've been around for a while. A little bit of an overview for those people who don't know too much about it, if you wouldn't mind, just to start us off.
Certainly. Chariot Oil Gas, we're an independent, AIM-listed exploration company. We're focused on the Atlantic margins, and we've now got a balanced portfolio of opportunities that are in Namibia, Brazil, and Morocco. And they range from discovered resources in a potential development in Morocco through to low-risk tieback exploration opportunities in the same country, through to giant-scale elephant opportunities that sit within both Morocco, Namibia, and in Brazil. So we've got this broad portfolio. We have a strong balance sheet, and our cash position is significantly in excess of our commitments that sit within that portfolio. And we see this as offering our shareholders exposure to potential value from anywhere within that portfolio.
Excellent. You've had a very busy couple of years. If I could, I'd like to divide that into two. So 2018, when you were doing the elephant hunting and other bits and pieces, and then why don't we talk about 2018 first, just to tell people what you were doing then?
Okay. Well, 2018, Chariot was then closing through the final stages of giant exploration, both in Morocco and in Namibia. During the course of that year, we participated in 2 giant-scale wells within the deep water part of both those countries. In Morocco, we participated in the Rabat-1 well, which was fully carried. E&I drilled that well, and then we operated Prospect S in Namibia, so that was operated by Chariot within that country. Both of those wells were unsuccessful, but quite ironically, they've been instrumental to us broadening the portfolio. In Rabat, the Rabat-1 well we drilled in Namibia, we encountered oil within that, but in sub-commercial quantities. But that oil wasn't from the source rock that we expected it to be. So what that allowed us to do is to challenge the understanding of the petroleum system, and it was on the basis of that challenge to that petroleum system that it led us to subsequently securing the Lexus license in Morocco.
So that took you to 2019, and tell us exactly, because it's a lot of fun. You rebalance the portfolio a bit, and then tell us about the Lexus license.
Yes.
And so on.
Well, I think the other sort of just on 2018, one of the really important parts there was the operation that we undertook in Namibia as well. So we operated the deep water well. That well demonstrated a whole series of new benchmarks for deep water operation, and the operating capability that we demonstrated there was sufficient to persuade the Moroccans to award us the operation of the Lexus license, and the Lexus license is really quite different from what we've done historically.
Great. I jumped in a bit early there.
That's quite all right. Yes.
I'll let you finish that, and then we can talk about Lexus and how different it is to those other wells and so on, and what it carries with it.
Okay. Well, the Lexus license is in the offshore part of the northwestern part of Morocco. The license itself is in excess of 2,400 square kilometres. And in the block, there are 4 wells that have been drilled, one of which is the Anchois-1 gas discovery. And it was evaluating the petroleum system that led us through to look at Anchois. We secured the license, we signed it in April. It became effective at the end of May during the course of last year. And then in the remainder part of that year, we completed 3 competent person reports, CPRs on the resources of the prospectivity, 1 on Anchois, which was the discovery, 1 on the satellites which surround the discovery, and then the additional prospects within the block. We also completed a feasibility study into the development of Anchois as a production facility, and then we also undertook an extensive evaluation of the Moroccan gas market through that process. So all of those pieces allowed us to put the jigsaw together that describes the asset.
So within the jigsaw, tell us how many barrels or TCF of gas that that gave you on the CPR, and then of course on the maybe describe in a little more detail Anchois and the satellites and the other parts of the license. What did you? Because you've got quite an expanded number now, haven't you?
Yes, and when we signed the license and we announced it, prior to that we'd been able to do extensive technical work on the legacy 3D seismic data was there, and we had completed a description of the Anchois field. Netherlands Soul, our auditors, undertook a CPR on this, and within the Anchois discovery itself, we describe 423 BCF of 2C resources. So that's the proved and probable part of that resource. 423 BCF. That's equivalent to 70 million barrels of oil equivalent. So that's the discovery itself, and then surrounding that discovery, which sits on an arch, are a series of satellites, and Anchois and the satellites make up a TCF of contingent and prospective resources. So that's the equivalent of 170 million barrels.
Yeah.
And then there are additional prospects to the eastern part of the block, a series of prospects that we've described. Separately, they're 1.2 TCF, so that's another 200 million barrels of prospective resources of oil equivalent that sit within that prospectivity. So 370 million barrels of oil equivalent across the entire block in proven reserves and very low risk exploration opportunities.
Okay, in a minute I just want to come back again to, you mentioned the Moroccan marketplace, which is interesting. Just before we go on to that, this is an offshore development, but not very far offshore.
Yes.
And the idea of your feasibility study and various other studies presumably have been to drill it offshore, and what you may have to, you're bound to have several different studies to what to do, but you'd pipe it on the gas ashore and sell it on shore. Is that your plan? Or?
Yes. Well, what we did was, through a third-party engineering group, we went through a series of development scenarios, and we identified the optimal development scenario, which is a subsea development. So that's wells tied back to a manifold that's on the subsea. From that manifold, the gas then goes back onto the onshore, where it goes through a central processing facility. Now, this gas is 98% methane. It's got some hydrocarbon liquids in it, but it's essentially a sales quality gas. So the CPF, the central processing facility, all it needs to do essentially is to manage the pressure associated with it, and then from that point it can then go into the market. The important part with the feasibility study was that we were able to describe it and scope it, and it's all current technology. It's essentially an off-the-shelf development. So it's totally technically feasible. There are no specific challenges associated with it, and there are numerous examples of fields being developed like this in Europe and in Africa and in the Americas.
Excellent. I was going to do this afterwards, but let's go straight on to the Moroccan market, because you are then going to, as you say, have good quality gas onshore ready to sell. As I understand it, there are a number of places that you could go, because there is the Moroccan market itself, which is short of power. I mean, they even use coal still for power, so that presumably there'll be power stations who would like your gas. There's industry who could probably take your gas direct. And of course, there's a whopping great pipeline that goes up into Europe. What would be your sort of preferred plans for that, or are you still open-minded on that front?
Well, I think what's really exciting about the energy market within Morocco is the growth that it's experienced. It's doubled in the last 20 years, and that growth is continuing. So it's, as most emerging economies, the requirement for power to generate wealth creation in those companies and generate the GDP, that's been something that's been demonstrated really quite significantly and dramatically within Morocco. And that power generation is principally underpinned by imported fossil fuels. So coal is a significant part of their power production, and that's imported into coal power plants. 20 years ago, they, during the course of the building of this pipeline that goes from Algeria through into Morocco, Part of the process there was that some of the gas is taken out and is used for power generation. But the important part over the last 10 years or so is that a significant part of the growth that's come from power generation within the country has come from the gas sector and also from the renewable sector, and clearly an important part for developing energy and power in these countries is the more that it can be using a transition fuel, the better that is. Now, in terms of our gas and the market associated with our gas, in terms of the prospective resources, we see a range of potential production profiles, but they can range from 35 million cubic feet a day up to 100 million cubic feet a day. In and of itself, that's significantly larger than individual industrial markets. But it doesn't mean that we won't look to tap into those individual industrial markets for excess production over anything that might go to power generation within the country. In the country, currently, they use in the region of 120 million cubic feet a day of gas for that power generation. We have the capacity, and that's imported Algerian gas. We have the potential to replace that with indigenous Moroccan gas, but also as the power generating sector grows, we could have the potential to supply that not from Anchois, but from the satellites and the additional prospects within the region. And then, of course, the other important thing is that gas is there as a replacement fuel for fuel oil, which is very expensive, a potential replacement fuel for coal, which is very carbon rich, and the gas price that's there within the current market is really very strong and it's very positive.
So you would hope to be getting, I mean, I've heard sort of $8 or $9 a scaf for this, and you would be, making the numbers on your calculations look pretty handy. And of course, the fiscal regime in Morocco is also very, very helpful, as we know. So that takes me on to partnering, because you've got 75% of this. You're coming at it unusually from. You have the 75% with on him having the other 25%, and now you've already done some work looking to partner. And I imagine that this means that you've got a slightly different. If you're partnering for a deep water well, the handful of E&P companies or majors, whatever you're going to go to. This must be somewhat different, wouldn't you think?
Well, firstly, we've been really very pleased with the responses that we've had to the partnering process, and particularly the recognition of the resources. The groups that have come in recognise the same resource range that we recognise. They see it as a feasible project. They're excited about Morocco, the commercial terms of Morocco and the gas market. So all of those things have been really very positive. What we did genuinely expect when we first went out to start the process is that because of the scale of the opportunity, that this would appeal to the smaller scale companies. But we've been really quite surprised, because through the data room we've had super majors, we've had large independents, we've had African-focused gas players, we've also had private companies, and we've had private equity-backed companies, and we've had private equity. That's just from the E&P sector. We've also, as part of the process of the feasibility study, we've also been able to work with the engineering groups that would be participate in the development. And at this point, there are 2 consortia that are under confidentiality agreement, and they're evaluating the project, and they have interest in the project, either potentially in an equity position, but also in a tariff position. So rather than paying for a pipeline, it's a $1 per M process for a pipeline. And so those conversations are going. We've also been in discussions with potential gas off-takers, and so that's the industrial sector, that's the power sector within Morocco, but also within Spain as well, which is where the GME pipeline goes through. The GME pipeline currently exports from Algeria in the region of 2 BCF a day. So clearly, if we could produce 100 million cubic feet a day from that's a small part of what that piece is. So we've been in discussions with them, and then also we've been in discussions with the finance group, so those groups that would come in terms of a debt position. And the way that we see that is, following the appraisal process, this project has the potential to be 60% debt financed during the course of that development process. So we've had really very strong and positive response across that range.
Yeah, I mean, that's incredible because you've got all the usual suspects.
Yes.
You've got the suspects in the engineering area who would normally expect to be a paid client on a turnkey project. You're actually saying we can do this on an equity basis and be a participant in it, as well as all the others. And the Spanish company that owns the pipeline also has a power station or a big stake in a power station up there as well.
Yes.
This is going to take you some time to go through, obviously, so many people. Can you give us an idea of how long, I know you can't tell me when it will be done, but an idea of the timetable of getting this done?
Well, I think in terms of the partnering process, we're very optimistic, we're very positive. Yeah. We will be announcing partnering in the short term. Defining the short term is the challenge. Certainly our experiences, our two most recent farm outs, one took 8 months from agreeing the commercial terms to being able to announce the farm out agreement, and the second one took 8 weeks. Yeah. So, and that's really a function of the scale and the size of the companies that we deal with. These companies generally have multi-functions. They have to go through a whole series of gateways to be able to get their approvals, and then so it's really we can manage our time, but we can't manage their time.
Exactly. So I mean that sounds very exciting, and it's one of the reasons I've sort of pinpointed Chariot as being one of the stocks to look at for this year. Briefly, 2 quick questions. First of all, you haven't forgotten about all the deep wells that you did in 2018?
Not at all. I think there's 4 things that we're focusing on. One, now that we've completed all of the work on Anchois in terms of its description, it's about partnering on Anchois. And that's a sort of very active process that we're involved in. In terms of the remainder of the portfolio, partnering on that is key, and we're looking to progress through those pieces. The third part is new ventures and what we might do in new ventures. Clearly, we were able to lever what happened in 2018 to get into Lexus in 2019. We'll continue to look to lever what it is that we learn about our portfolio to potentially access additional new ventures. But if we do anything from a new venture, it will because it's value accretive and it makes sense to the company, it makes sense to the shareholders. And then the other part for us is to continue to focus on capital discipline, on our cash position, maintaining it above our commitment level, and then just optimizing value throughout the business.
Brilliant. The second part of that question you almost answered earlier on, and you almost answered there. So in terms of the cash position, strong balance sheet, no debt, cash a bit more than the actual market cap of the company at the moment.
Well, we're about the same at the moment.
And effectively, you're going to go into this process with a partner who it'll be different from the normal one, probably given how many people you had. But in the old days, you'd have said, we expect to be cash and carried in one way or the other for that. Yes. So I think we're pretty much up to speed there. Two very much quick questions is that that Chariot has changed a lot in the last year, and I defined it as a change in balance of risk. Would you agree with that? You've just brought down the risk a little bit from going for the elephants and for the big ones.
I think there's 2 parts. Firstly, we've still got a diverse portfolio. It has significantly reduced the risk. So previously just the giant scale elephant high risk opportunities, we've now got discovered resources. So technically, essentially 0 risk associated with that, and very low risk prospects immediately adjacent to it that can be tied in. And they're low risk because they look very similar to the Anchois discovery. So we've broadened the risk profile, but also we've changed the timing associated with what's happened too. So Anchois has the potential for near-term cash flow generation. And of course, if we had cash flow generation, that would give us a sustainable business model and would really change the dynamic about how we could then look at alternative ways of managing the exploration, the giant scale part of the exploration program.
Excellent. That nearly answers the last question, which is where do you expect to see the company in 12 to 18 months? Anything else you'd like to add to that? And if we came back in 18 months' time?
Well, I think in 18 months' time, it's that we've drilled the appraisal well, we've had an excellent flow rate associated with the process. We're partnered, and we are a significant way through the FEED project that would lead to FID, to final investment decision.
Fantastic, well done.
So, great.
Thank you very much for joining me.
No, thank you, Malky.
My guest today has been Larry Bottomley, CEO of Chariot Oil and Gas. Thank you very much for joining me, and I look forward to seeing you again next time. Bye now.